All right. So base and quote. So if it's on the left, let's say that I'm like, I think that the euro is doing great. I want to buy it. So you buy this. If you're buying that, well, then that means you have to sell this, right? Yeah, you can't buy both of them. You got to buy one and get rid of the other. That's the trading part. Okay. On the flip side, if you say, I want to go ahead and put a sell in on this, I'm selling this pair here. Okay. What you're saying is, somebody's drawing again. What you're saying is, I want to sell this currency pair and I want to buy this one. I'm selling this. I'm getting rid of it and I'm buying this. Why would you sell or buy? You are buying something because you feel that the value is going to go up, right? Buy high. Wait, was it buy low, sell high? So you want to buy it because we're all cheapskates, right? Hopefully. We're all a little bit frugal. We don't want to buy something at top dollar. Natasha said, yep. We don't want to buy something at top dollar. I'm too cheap for that, guys. We buy it at the lowest price. And then what do? If you're really a hustler, you sell it. You sell it when it gets high. That's what we're doing, all right? So when you look at these markets, you are trying to see, okay, when is the market going to be low? When is it going to be high? Okay, and like with these amazing skills, you're going to get to learn how to figure that out to some degree. Because when we first get started, we are all, let's be honest, we're all gambling, all right? But once you start to learn the skill, you will start to have more of a science to it. That's kind of why I call myself trade science, because I do believe that trading is an art, but it's very much a science. All right. What are you doing? You're making an educated guess. How is your guess educated? Because you are figuring it out based on plenty of analysis. Okay. When we first get started, when I first got started, I just kind of went off my feelings. Oh man, I just feel it. I don't really know what it is. Gambling. I just feel like it's about to go down. I don't know why, but I just feel like it. You know what? That really wasn't good for me. I don't know if anybody out here is anything like me. I am directionally challenged. I have a hard time following directions. It is a science. I have a hard time following actual GPS directions. I've lived in the same city for, 15 years. And guys, I still use my GPS. I'm sorry. I have to admit it. So I don't know what I was thinking, thinking that I could just feel like the market's going to go down. I don't know why, Okay. So moving on. When you see here, this is a sell point. Why is this a sell point? Because this is the highest point that the market reached before it's a good time to sell it off. All right. And this is a buy point. This is because this is a lowest point, and then the market started to go up. So what's actually happening here? All right. Let's think back to when we used to sell things. Like anybody all around the world, everybody's had their little thing that they collected and whatnot. I know for us, it was like baseball cards, or it was, what are those things? Stamps. It was anything like that. Comic books. Okay. So back in those days, what did we do? We tried to buy them when they were cheap, when they were low. All those great Superman, Batman, anything original comics, we bought them when they were like 15 cents, 25 cents. Can you even believe that they were that cheap at one point? And then what ends up happening? Oh, look at that. As people start to see that, look, there's a lot of value. Those things are going to go up. You should buy them and hold on to them, whatever. The value goes up. The more people start to see value, they start buying. As they are buying, they're pushing the value up. So these right here, all these numbers are called pips. And this is really people jumping in. Like this market is reflecting, it is putting real-time data of people doing buys or sells. As they place buys, the market goes up. The value goes up. Think about the comic books. As you start buying it, more people buy it. He buys it, she buys it. Now the value is high. Everybody wants it. Everybody wants a piece of it, right? Okay, so now if you're on the flip side of this trade, what's the best thing for you to do when it gets to this high point? Sell it. Why? Because people want the high. They want it. It's hot. It's got great value, okay? They want what's hot. So that's what's happening there, okay? Same thing. Now, when people start selling, let's say we start selling it off, just selling, everybody's just selling it, all right? The value goes down. All right, value goes way down. The more the market gets flooded with it, the value goes down. All right. If I know that, this comic book is like, the only one of 3 in the entire world, the value is going to be crazy high. But if I know that there's probably about 80 million of them in the market, and the value's gone, y'all. The value's gone, okay? So that's what's actually happening. The market is recording people making transactions. That's what these little things are doing right here, okay? So that's good. I'm glad that was helpful for you guys. Also, feel free to ask questions. So now, there's actually a science to this called technical analysis. All right, Chris Derrick and the New York session, you got Jay Pips and Lex Waves. Justin Adams, Christopher Terry, they all use technical analysis. All right, Chris Derrick gets you right on the IML Academy. And he talks about support and resistance lines and whatnot. I totally urge you guys, if you have not gone through it, at least go through the basics, intermediate 1 and intermediate 2. Those will be very helpful to you before you get on the London session again. So it says, can you switch your sell to a buy? Not while you're actively in it. No, you would have to close it out and then, get into the opposite one. And I'm glad that you're feeling like you understand this, okay? So right here, notice how the market, like this right here, is considered a ranging market, which means it's moving sideways, and that it's not going up and away. It's actually moving up and down and up and down and up and down. And if you were to like zoom out from far, far away, it would actually just look like it's going sideways. Now, if you look here, if you were to try to take advantage of this and trade this market, you can actually see like, all right, the market got up here. And then people felt like at this value, it was time to sell. So when it got that low, people felt like it was time to buy. So now, look at that. It got back up here again, around the same area. And what happened over here last time? People sold. So what ends up happening now? People sell. Same thing. When it came all the way down here, what ended up happening? People bought. They started to buy. So now, eventually, people will get to a point where they start watching certain places in the market. Like that was a huge selling area. And this is a huge buying area. So people start watching. All right, as market moves in here, boom, look at that. It's a sell. I'm selling it. I'm going to sell. I mean, you're making an educated guess, guys, truly. Nobody knows. No one has a crystal ball. But there's so many different things that you can actually do that I have learned through IML that will help you make a higher probability trade. You want to take high probability trades, okay? And that's one thing about swipe trades is he does a great job of, if you get on Justin Adams, that's why I stopped doing mine on Tuesday, so you guys can see how he makes his analysis. If you watch him, he has plenty, you don't got to understand it right away, but he has plenty of technical analysis to back up why he's calling trades. All right, let me take some moments to just show you this. You see these long wicks right here? Those are really good. Those are called wicks. And this black thing or that white thing is called the body. I'm so glad this is very clear. All right, this is called the body of the candle. These are, called candlesticks. All these little things, these little lines, remember I called them jiggy jaggies when I first came here. These jiggy jaggies are also called candlesticks. All right, that's the better name for them. And these little skinny lines are called the wicks. All right, so basically what it means is like it tells you, one of these candles tells you a story. It's going to tell you the lowest point it's ever been, which is like right here, the highest point it's ever been, where it opened, and where it closed. So that's basically what this whole thing tells you. 4 things. If you've ever looked, and now let me just take a little pause just to show you this. Let me take a pause. I'm going to go to TradingView. This is something that I look at a lot. Okay, so let's see here. Business tools. All right, so TradingView. I love TradingView. FYI, TradingView is amazing. All right, and this is kind of like MetaTrader 4, but you can do a lot of drawings. You can do a lot on MetaTrader 4 too. So let me go Euro USD. I'm just typing one in. Okay, showing you guys these candles because it's important for you to know about these candles. Why? Because this is what we're all here for. We're trading these candles. Okay, so check these candles out. Mine are pretty colored. That's one thing I like about, I made mine this color. So the blue represents they're going up. The purple means they're going down. Blue, or any candles that are going up, are called bulls. Okay? Any candles going down are called bears. So the bears are going down, bulls going up. All right, bear down, bulls swing up. All right, so that's something to write down if you're new and you forgot that bullish candle or it's a bullish market. If somebody says it's a bullish market, then that means overall that market was moving up overall. They said it's a bearish market. Overall, that market was moving. You might have had ups and downs and all arounds, but overall is moving down. All right, so that's what they're referring to. So now I talked about these little long wicks, okay? And I won't go into crazy detail on this right now just because I want to make sure I keep it simple and basic. That's the basics of the basic trading, right? So see this candle right here? This is a good one. See this long wick right here? Let me use this purple one instead. Let me find, okay, here's the purple one. All right, see these little teeny weeny words right up here? See them little words? It says OHLC, open, high, low, close. Let me try to get closer because I understand what it's like to not be able to see that well. See that OHLC, open, high, low, close. That's what that means, okay? So these candles here, it's going to tell you the lowest point. So that L right there is talking about the lowest place that this candle ever was, which is going to show with those wicks. The high is going to tell you the highest the market ever was, okay? And then the open is going to, it's different depending on the candle. If it's a bullish candle, it's going to open in a different place. And I urge you to look that up. It'll tell you about it because if I tell you, you might forget. But right here, this is where it opens. And this is where it closed. All right, typically bullish candles are always going to close above because they're always moving up, right? And bearish candles are going to close below. So this right here is where, let me find the easier one. This is where this one opened and it closed, right? Because it's always moving down. Bear candles will always close downwards, okay? Hopefully that makes sense. But I will say this, when you see long wicks like that, those long wicks are a good indication that the market is ready to do some moving in a different direction, all right? That is one thing that you can use along with many other things in technical analysis. That's a little technical analysis for you. That's one thing that you can use to help you figure out, okay, so this is gonna be going down, up, down. But notice here, see these long wicks? Woo! Like after a while, the market, this is called exhaustion. When they say wicks, or you see long wicks, that means exhaustion. That means the market was trying to move up here, but it just couldn't do it. So what did they do? They sold it. Same here. The market was trying to go down and make lower lows, but it just couldn't happen. So what happened? It went up, okay? So that's basically some things, all right? That won't always occur, but a lot of times when you see big, long candles like that, good indicator that the market's going to move. All right, so going long and going short. Going long means I'm putting in a buy. Going short means I am selling. I'm going to go ahead and place a sell, okay? So that's basically what that meant, all right? I'm so glad that this is helpful to you.